Welcome to a TMS Insights US stocks edition after the second quarter results out of the US, which we've been busy digesting. And there's been a lot going on, Ben. Obviously, when we talk international stocks, we often talk about the big tech leaders. Just as a starting point, one of the risk factors going into it was about the US Congress hearing about big tech, which turned out to be a non-event.
Completely. I think the highlight being when one senator asked Mark Zuckerberg why he banned Donald Trump from his site. He said, "Sir, I think you're referring to Twitter. I'm the CEO of Facebook."
Yeah, they showed a lack of knowledge on the congressman's side, didn't they? But there's not a lack of knowledge on the big tech stocks, which we'll get right into. And Ben, some of these have been absolutely incredible stock performers in this last difficult 6-month period for equities. Now, they're naturally positioned to win. Amazon, let's kick off with that. If you could ever pick a good COVID-related stock, it's been Amazon.
Absolutely. So I'll run. I'm just going to run through some notes from the various briefings. All the numbers are in US dollars. They did $89 billion in revenue in the last quarter. Now, the quarter 1 year prior, they did $65 billion in revenue. So it just gives you a feel for how much the sales have picked up. It was a strong beat. The net income for that quarter was double the previous quarter. And Amazon in the next quarter flagged that they're going to spend $4 billion just in protecting their employees. The numbers are just staggering. Grocery sales were up 300% in one quarter. And they actually had to put in place quantity limits on their third-party sellers because they were running out of room in their fulfillment centres to get all these products to the customers. Basically, the demand just took off so quickly and so heavily that they were struggling to keep up with it. Now, AWS, which is actually the reason we sort of got into Amazon in the first place, that's the cloud storage business. Revenue was $11 billion for the quarter. So it's about 13-14% of the overall group's revenue, but that grew by 29% versus the previous quarter. Whereas revenue overall grew by about 10 versus the previous quarter. So.
And they continue to invest in web services, but in all their delivery business globally too, isn't it? So the outlook is excellent. Given a year ago, they weren't profitable. So it's pretty incredible, isn't it?
I mean, sort of cycling now $20 billion in profit a year. If they do that, it'll be higher. But the thing always to remember is that they're not, last quarter, it spent their entire profit on protecting their employees. So, they'll invest and they're not worried about the quarter. It really moves around that profit per quarter.
Incredible. And a great movement. If we move to another player in the cloud, which is Alphabet and Google, of course, Ben, another cracking movement and good numbers.
Look, it was interesting because they actually had their first quarter that revenue declined since they floated. They did $38 billion in revenue for the quarter. And that, of course, was mainly because online advertising really dropped away. A lot of companies cut their marketing budgets, didn't want to spend too much money. They did say that was really starting to come back in the last month of the quarter. $28 billion in shares were bought back in their on-market buyback in that one quarter. And YouTube, which makes up about 10% of the revenue, was strongly ahead of expectations. More people at home watching content.
Even if the advertising wasn't as great, they had more eyeballs on it.
Exactly.
So the advertising will come.
Because they pay per click. So if you've got more people watching, those people are companies still advertising and getting more revenue. And the cloud business also strongly beat expectations. That's now about 8% of the overall group's revenue, and it was less than 2% a year and a half ago.
This cloud theory is not going away. Let's talk Azure and in particular Microsoft, which is another big beneficiary. I mean, they keep building capacity.
Absolutely. There's that. I mean, that had a cracking quarter. So Microsoft, $38 billion in revenue, which was up 13% for the quarter, but actually missed the street's expectations. But their profit was $1.46 per share, which beat expectations. Now, Azure, interestingly, Microsoft don't split out their cloud. Azure's the cloud-based business. They don't split it out, but they said that revenue was up 47% for the quarter versus prior. And that the Azure business hit $50 billion in revenue US for the fiscal year. Now, this business virtually didn't exist 6 or 7 years ago.
Yeah.
So they've created a 50 billion revenue business in that time.
And for all our clients, this is what we've said about a business like this, but not just this one. The optionality.
Yep.
There's things that we don't even know that are going on now
Yeah.
that'll be big contributors in 3 and 5 years' time.
Yeah, and a lot of those businesses are losing money at the moment, so it's actually pulling back the overall group's numbers, but they're investing in them, and at some stage they can, become the next star sort of business in the mix.
Yeah, and they still look pretty well priced to me. Like of the group, there's been a lot of price movement, but they look pretty good. Now Facebook, Ben, they've done very well again.
They did well. So they did $19 billion in revenue for the quarter. That was way ahead of expectations. It's probably actually the strongest beat of the 4 companies I've just gone through. But it was the slowest quarter's growth since the company floated.
That's an advertising factor too.
Absolutely. So that's what it was all down to. The earnings were $1.80 per share. The street was expecting $1.39. So at the profit line, it was a very strong beat. It was actually another highlight was revenue, Google, Microsoft, Facebook all missed, but profit was well ahead. And again, it was, costs. They managed their costs very rapidly during the downturn.
Which they can do. With capital light businesses can manage their costs.
Absolutely. Despite hiring people. So there's
Amazon,
other ways.
Massive employer
in
that period, wasn't it?
They hired 100,000 Americans in a month.
And they're keeping them on.
Keeping them on, Just a couple of other things on Facebook. They've now got 3.14 billion people who use Insta, WhatsApp or Facebook once a month, and that number grew by 150 million people in the last quarter. Average revenue per user is $7.05, which was a strong beat. And it's another key metric that analysts look at when they look at this stock.
Yeah, terrific one. Quickly to mention Visa and MasterCard. Again, the payments business, we know there's been, in some cases, less retail activity, more online, but a lot of contactless usage.
Yep.
How do they look to you, Ben?
Yeah, so they had a tough quarter. So Visa and MasterCard largely mirrored these sort of numbers, $48 billion in revenue, but that was down 17% for the quarter. Payments volumes fell 10%, so that's the physical paying, but what collapsed was the cross-border transactions. So that's typically travel, and we all know why that's happened. Earnings fell 23% for the quarter, so quite dramatic. Despite that, they bought back $1 billion of stock on market, and they did say that payment volumes materially improved throughout the quarter. So this is probably, Visa, MasterCard.
Turnaround plays.
I mean, I reckon a vaccine, if you're looking for those sort of plays, they're probably good ones to have a look at because they have been hit pretty hard by what's happened. But we all know electronic payments have just jumped 3 to 5 years ahead as a result of COVID. And
particularly in countries like the US where they've been a relatively slow penetration.
And they still don't have tap and go.
Yeah, exactly. Let's talk Berkshire. Our old friend Warren Buffett. Okay. Now, he came out with his filings for the quarter on Friday night. Well, wouldn't you have imagined anything possible apart from the fact that he'd been buying gold? Gold has been a bugbear for him all his life. He's said what a dreadful asset. So he's been selling the banks, selling the airlines, and buying gold. Barrick Gold.
Amazing. And it's probably, they reckon, because they don't say, but Ted or Todd, the two portfolio managers underneath him, have probably made this call, and they have more and more freedom to make these calls. So you know what? I still think it's a good thing about Berkshire in that, younger guys, I mean, they're in their 50s, but younger guys coming through, it could be a good thing for the group as a whole.
I think it is.
Looking at, technology is one thing we know.
And of course, we were there last year. Their investments in Apple. Now they're biggest, and they're the biggest holder of Apple. So hasn't that been a great success?
17% of their overall portfolio now. Incredible. So, that's extraordinary.
And that just shows how they've innovated. So don't rule them out. They still pretty good value too.
Absolutely.
So that was the reporting season for the US, and that's TMS Insights today. Thank you.